Hi friends, my name is Aditya, and in this presentation we'll look into how Warren Buffett is facing the current crisis. The year 2020 has been a very volatile year for all the stock investors, as we know, my friends. And Warren Buffett being the biggest stock investor, it's very pertinent that we look into how he is tackling the current scenario. So one by one, we will get into all his basic tenets and also the current changes that he is making in his portfolio to counter the crisis. Rule number one: always bullish in the long term. In the AGM, which happened in 2nd of May 2020, Warren Buffett started with the statement or the conclusion, never bet against America. He repeated the same statement repeatedly in the middle of his meeting, and he ended with the same statement. Warren Buffett has always been an advocate of long-term investment strategy, and this time it is no different. But when prices rise like dark clouds in the horizon, Warren Buffett prepares himself to make maximum use of the coming rains, which means he is still in waiting mode. He is holding a lot of cash. That means he feels deeper corrections are in the horizon. Let's see exactly how he is preparing for these current changes. Very high cash holdings. Warren Buffett currently is holding a cash amount of $137 billion, which is 65% of his public stock holdings. Last time he did this was before the 2008 crash. Takeaway from a foreign investor: when rains start falling, don't come out with a teaspoon, come out with a bucket. How to do that? Keep cash in hand and use wisely if at all necessary. Buy stocks now? Not really. Warren Buffett clearly has said in his AGM that he does not think it is a perfect time to buy stocks. It is obvious when you look at his cash holdings, $137 billion. Also, in a letter to the shareholders, he has recently said that the prices of the businesses he is looking to take over is sky high. Although he was talking about the businesses that he was looking to take over, even he has not gone for stock buys, which means he is of the same opinion regarding the stocks too. Warren Buffett has actually sold stocks. Here is a list of the 19 stocks that he has sold, and this is the most recent data that we have got. You can see there is a huge sell-off in the Goldman Sachs and in the airline stocks. In fact, he has sold his entire stakes in the airline companies, calling it a mistake in his AGM. Not only that, he sold a huge chunk of Goldman Sachs stock holdings also. He also sold off the oil and gas Phillips 66 stocks. Takeaway: keep healthy cash once again. Warren Buffett dislikes high leverage. He has always stayed away from highly leveraged operations. His sales of airline stocks is just a reiteration of the same. In fact, his worry about the asset quality in the financial segment is also reflected in the sell-off of the Goldman Sachs stocks. Learning for us: once you take debt, you have to pay back irrespective of how the markets behave. This becomes a dangerous recipe in volatile demand scenarios. Warren Buffett has eluded his worry about the changing consumption behavior. He has expressed deep concerns for a few sectors in particular, viz. Airlines, entertainment, and hotels. The stay-at-home trend is going to impact the long and mid-term behaviors of the people, and their consumption behaviors are likely to change. My takeaway: buy only on deep enough corrections and generally take very cautious decisions. Today you might be thinking that certain hotels, airlines, entertainment stocks, and many other financial sector stocks are in a certain segment where they are very lucrative in valuations, but the valuations are basically based on the previous earnings. The future earnings nobody knows. Only one can make guesstimates. So be very cautious when going for these stocks. Warren Buffett has had very clear views on the currencies. Warren Buffett is keeping cash not because he finds cash a great investment, but because it's a medium of making great investments, a medium of exchange. He and his partner, Mr. Charlie Munger, have expressed awareness of the effect which stimulus, low interest rate, and deficit spending can have on the overall health of the economy in the long run. My takeaway is: currency generally tends to lose value over a period of time, and in the current scenario, the value may tend to depreciate rather quickly over a period of 1 to 2 years, which will make life very difficult for certain sectors or certain segment of people over the long run. So, we revisit the basic tenets of Warren Buffett in the current scenario. He is very bullish in the long term. He is having very high cash holding. He is not really buying stocks right now. He is actually selling stocks in certain segments. He dislikes stocks or businesses which are with high leverage and stays away from them. The consumption behaviors are changing. He is also alert regarding the effect of stimulus on currencies. Thank you, my friends. Stay joyful, stay safe, stay home. Please like, broadcast, share, subscribe, and comment on my videos. It will help a lot. Thank you.